Hi, my name is Austin. I have a degree in finance and I want to explain why I think whole life insurance is a scam and what you should do instead. So, what is whole life insurance? Whole life insurance is also known as cash value life insurance, and it's a type of permanent life insurance that promises to pay you a death benefit to your beneficiaries whenever you die, as long as you keep paying your premiums, which sounds pretty good, right? Well, not so fast because there's some catches. You see, whole life insurance is marketed towards people as an investment because it has that cash value component, which is supposed to be a savings or an investment account that grows over time. The insurance company will take a portion of that premium that you pay monthly and put it into this account, which earns a guaranteed rate of return. And yeah, when you explain it like that, it might sound nice because you pay one fee and you get an investment and life insurance. But it might even sound a little too good to be true, so let's take a look at how it actually works and the ways these companies are absolutely ripping you apart. So here's how it works. Number one, you pay your premiums every month. These payments are actually very large, and they're about 20 times larger than term life. In fact, a 30-year-old male will actually pay $571 a month for a whole life policy. Number two, the idea of the cash value portion of the life insurance, it will grow slowly over time. So for every $100 you put in, for the purposes of this example, $95 will put into that cash value portion, or what they call the investment part of the plan, and the other $5 will actually go to your life insurance coverage. Number three, it's like a savings account, so you can actually get access to your cash. Well, not really. Actually, you can get a loan to borrow money against the balance of your cash account. And then if you don't pay that loan back, they'll actually take that out of your death benefit, but I'll talk about more about that later. Number four, so now you're at the maturity age of the policy, and that's either between 100 years old or 120 years old, or when your policy equals the death benefit. That's effectively when your policy ends. Or if you die before the account gets to maturity, it will then pay the death benefit. But if, Austin, you say this product is a scam, why would people be recommending this? Don't they have a moral conscience? Newsflash, people don't care about you. That's why we are here. It's recently started to gain traction again, primarily on TikTok, and people are running ads on YouTube now for whole life insurance, calling it investment grade life insurance. But if we're being honest, it's just another way to package up some garbage and sell it to you. But the key term there was sell it to you, because the job of an insurance agent can be very lucrative, especially selling whole life insurance. Whole life insurance agents actually make 100% of commissions that first year. That's a bigger red flag than people who have snakes as pets, and they call them cute. But seriously though, remember, if you are paying a $5,000 premium per year, that first year, meaning $5,000 is going back to that salesman who sold you that policy. And that's why it's becoming more popular again, especially with that last 5 years of growth on Google. I've seen it online where people talk up whole life insurance on their social media pages, and then it's them kind of going on about whole life is a guaranteed income for life. And the reason they talk about this though is because they are the ones selling it. They are getting a crazy commission, or they are funneling that commission to an agent and giving them a nice kickback for that referral. There's also a third scenario where they just have no idea what the heck they're talking about and they just want some views. Remember, insurance agents have zero fiduciary duties, and a fiduciary duty means that agent has your best interest in mind. This is common in financial advising. That's why you can take advice from a financial advisor, and you should not be taking advice from an insurance agent. So let me get into why, in my opinion, insurance agents are scamming people. Reason number one, the rate of return is absolutely terrible. It makes stuffing your money in your mattress sound like a good investment. According to Consumer Reports, they found the average rate of return for a whole life policy was only 1.5% per year. And since inflation has been much higher than 1.5% for the last few years, this means that this so-called investment has actually been losing money compared to inflation. Really, it's a joke to call this an investment in the first place. Remember, right now there are so many high-yield savings accounts paying over 4%, and I would be choosing one of those versus a whole life plan only paying 1.5%. That brings us to reason number two, the price of whole life. Here's one thing that just really bothers me about whole life, and it's that monthly price and that premium that people are paying. For example, if you're 30 years old and you want $500,000 of coverage, you'll be paying around $500 per month for whole life insurance. People are already having problems paying money, and now you want to force them into this long contract with a monthly payment. It's just not. On top of that, whole life is marketed to younger people because they're just easy to target. They get a call from whole life agents telling this is a good investment and giving them lines like, hey, do you want to invest in your future? And in my opinion, it's just scammy and unethical, especially when just those people don't know better. And right there is a great reason to subscribe and learn more about what are good investments. I feel like there are so many reasons not to get whole life insurance, but number three, it's just unfair. So the benefit that is marketed is whole life is an insurance with an investment component. So you pay these high premiums and you're adding this cash value to your policy while also paying for the life insurance part. Kind of like a 2-for-1 deal. You should get both. You should both get the cash investment that you've been putting in and the death benefit, especially since you're paying a price tag of $500 a month. But no, this is not the case. The insurance will either pay out the cash value that you have built up over the years, or if you die, they will pay out the death benefit, but they will not pay both. So this means, God forbid you die and you have to exercise your life insurance policy, they will only get you the death benefit for the policy. And that cash value that you've been saving up for so many years will just be gone and the insurance company will pocket it. So all that time, all that extra money that you have put into it, your family doesn't get that. They don't get any of the cash value, they only get the death benefit. And on top of that, if you want to take out the cash from your account, you can't even do that. You have to take a loan to borrow against the money that you've been saving at an interest rate. So when you want your money to come out before maturity date, they will still find a way to make money off of you. So let me break this down. You have to lock yourself in an insanely long contract. You have to pay super high monthly premiums, and you have to save up your hard-earned money in the cash value portion of the plan. And when it comes time to pay out at maturity or death, you either get to keep the money you saved or you get the death benefit, but you do not get both. So yeah, you can see how I am not the biggest fan of these insurance policies, but I do think it's for good reason. So let me share what I believe to be the best options for those who still want to have life insurance, but also want that investment side of things to keep going. If you want life insurance, buy term life insurance. Term life insurance is actually a very reasonable and it's a very good product. For the same amount of coverage of life insurance that would cost $500 a month for a 30-year-old man, the term life insurance would only cost $15 a month for $500,000, making this a much better option. The idea of life insurance is to cover the money that you'll be bringing in for your loved one. So if you pass, they get a chunk of change that you would have been bringing to the family. And as you get older, you just don't need the same amount of coverage anymore, because by that time you're older, you now have some assets, some savings, and some healthy retirement accounts. Term life insurance is like it sounds. You are buying coverage for a term. The terms are usually between 10 years and 30 years, and they will pay you a death benefit if you die. So it will give you the life insurance you want to protect your loved ones, and it will also be about 20 times cheaper. But Austin, what about the investment side of things? Great question. Well, one, I wouldn't call whole life an investment, but if term insurance costs around $15 a month and whole life costs $500 a month, then you can simply invest the difference. That gives you $485 to put to whatever you want. And personally, I would put it to something like an ETF like VTI or the Vanguard Total Stock Market Index Fund. Remember, the whole life was paying you about 1.5% interest, but VTI has been averaging close to about 10% for the last decade, which is about a 5x higher return. So you can buy that ETF on many different platforms. I often use Webull because it's free, and with a link below, you can sign up and you can actually get free stocks for yourself. But by buying term insurance and investing the difference, you can save a tremendous amount of money and you get a much better investment that will pay you a much higher rate of return. Remember, every company will want to make money off you. It's important to find the products that bring the most value for the dollar that you put in, and that's by far term life insurance. Please be careful about what you see on TikTok and ads, because whole life I don't think is an ethical product. Agents will take 100% of those first year commissions, and the cash value for the first 3 years is almost nothing. So be careful of what you listen to. If you want it straightforward, please give the like a video. Please give the video a like and subscribe for more content like this. I hope your day is great, and I will see you in the next one.